Welcome to Bears in Exile. Today is Tuesday, February the 26th, and this is a quick hit on the indexes. Not quite as much as I would like tonight for going over things, but still a decent showing. Here we have the Dow up 100 and almost 16 points. Very nice movement. Definitely better than essentially everything else. Yeah, some people might say that is, people going to blue chips to protect themselves from downside. Maybe. But regardless, where did we stop today? Right at the halfway mark of the big red candle, which is first resistance. So, very interesting. It did get down to the long-term moving average bar yesterday, started out there today, and was ejected. So, long-term moving average bar, very strong, great separation. There's a lot of work to do in order to bust that down. Beyond that, we do have a new recent low. It should be retested at some point. Does that mean it's going to be tomorrow? We don't know. There is still plenty of NDEs in the form of the sequester and the Ben Bernanke testimony part 2 tomorrow. So, but beyond that, what do we have? 14-day RSI moving average still moving down. Everything else trying to curl back up. Possible secondary reset? Yeah, it's entirely possible. Have things got so low that they cannot go lower? Absolutely not. There's room on the stochastics. There's room on the MACD. There's room on the RSI. RSI is not below 30. So a little bit of a bounce here. I think it's a good thing. And at some point we'll be finishing off to the downside with the 14-day RSI moving average. So yes, there's movement down still to be had, I think. Whether it's able to beat the long-term moving average bar or just damage it is an unknown at this point. But yeah, unfortunately we weren't able to stay below the upper price consensus level, but where it is, I guess that shouldn't be surprising. Moving on to SPX, which there is more to this one than the Dow. For one, we did not get to the halfway point of the big red candle. We were not even able to clear the long-term moving average bar entirely. So very nice. You can see here, 14-day RSI moving average down. Everything else still moving down, unlike the Dow. And still room to move to the downside, at least on some of these, the RSI, the MACD histogram. Very nice. All that we want to do really at this point is to maintain inside the long-term moving average bar and break it down. That would be the best thing to do. And those targets from last night's video are still good. We just have some fighting to do. Moving on to the VIX. This one's very interesting. For one, we had the way outside the upper Bollinger Band move yesterday, which getting back inside of it, totally natural. I was kind of hoping that it would just push it back, but it wasn't going to be the case, unfortunately. But we did hold the 200-day moving average, which is very important and very bullish if we're able to maintain. We do not have a downtick at this time, even though it is crazy. We have worked off much of the topping area in the heat map with today's move. And we do have many things attempting to roll: CCI, stochastics, RSI, and everything else is still pointing up. So a little bit down from their extreme highs. I don't have a problem with that at all. You'll notice the RSI is not above 70 anymore. We will be able to turn around and go up should the right news arise. So looking at this and saying, oh, the move is over, it was too extreme, blah, 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 I wouldn't count it out just yet. Matter of fact, I would think that it would have one more blip to the upside. Can it exceed this high? I don't know. But getting a lower would make a lot of sense to me. So we'll see if that happens first before it decides to tame down. And we'll look at the internal structure of volume here in a moment. And last but not least, before the volume, TNA. This one's great. I really like this one. It's not as strong as the Dow. It's not as strong as SPX. We have a little doji, almost a spinning top inside the long-term moving average bar. It does have a new recent low. You could say, oh, this is a question mark candle of at the bottom of a possible range. This one could go up, yada yada. But we have no bottoming area in the heat map. We're just running into the resistance of the long-term moving average bar, and you'll notice we closed below the upper price consensus level today, unlike the Dow, unlike SPX. Small caps should lead, and this one is the weakest, easily. So very encouraging for the bears. 14-day RSI moving average still moving down. There's still room to go. Down on the CCI, stochastics, RSI, MACD histogram, very nice. I would love to see this hit the major price consensus level and then flip back, but I guess we'll see if that occurs. Looking at internal structure of volume, we were saying last night on the indexes we had the potential to get 5 reds very quickly, and that is still the case. This is the weakest. We got a new red today in the volume price trend. We are still in the danger zone with the accumulation distribution. We are not as dangerous in the unbalanced volume. We already have a red in the volume weighted MACD. We already have a red in the dual volume flow. So all 3 of the minors are reds. 3 reds. We just need a major to switch, and that'll be that. Going on to SPY just to get a better feel for the S&P. And what do we have here? Well, we had the on-balance volume turn to red yesterday. It is attempting to go back today, a little whipsaw. But we finally have first downtick on the accumulation distribution. So this is now a danger area. We're about to get a switch on the volume price trend. And so one good down day here, and we'll have this one straighten itself out. We'll have a new red making 4, and we'll be really, really close for the 5 on the accumulation distribution. This is very encouraging. I am not bullish at this time. I think that there will be one more dip, and to the extent of what that is going to be is very interesting, because it could be just one more shallow, it could be a deep. We just don't have enough information at this time, although this would suggest a decent move down, and that is very encouraging. I'm going to go to the VXX just because I'll get volume information. This is a triple on the regular VIX, and so it's a little bit distorted. And what do we have? Oh, what do we have? We have 1, 2, 3 greens. Got turned away with the unbalanced volume. We're not quite in the danger area yet with the accumulation distribution. And we have a new recent high today. And it is a inverse hammer, possible reversal signal. But I don't know about this. We normally don't have a massive break on the VIX to the upside. This is not what I was looking for. I'm going to go back to the regular VIX, because this just doesn't look right. Ah, here we are. Regular VIX. You normally don't have a break of the 200-day moving average and just a one-day pop and drop. Normally you get some sort of an extension or at least a fight. And obviously we have the fight, but I don't think that it'll be over quite yet. Doesn't mean that I think that it'll get some massive extension. Although normally you do get at least a second attempt on the break of the 200. Oh, that's really nice. That's not what I'm looking for. Anyways, here's a good example. a break, an up, it should be more than 2 days in duration. That's what I'm trying to really get at when you have a break of the 200-day on the VIX. So anyways, there's my thesis for tonight. Doesn't mean that tomorrow is going to be the huge down day. A lot of it is still going to be dependent on the NDEs, but there is still 3 days, actually kind of two complete days before sequester goes in. I would imagine that the day that it does go into effect, it's going to be ugly. And there it is. As always, all investing decisions are your own. This chart and video are for entertainment, educational, and consumption of time purposes only. Thank you very much.